Hi traders, my name is Yemi Olaleye. There's quickly something I want to share with traders. Newbies most of the times find it difficult to navigate how to use the proper tools on both MT5 and MT4, whereas there are tools that are supposed to help you to make trading easier for you. And I start with how you view the price, how you analyze the market, and how you execute your trade. But I'll take this very simple. I will start with how you see your chart. Seeing your charts can be done in three ways, which is popular on both MT4 and MT5. One, you can see your charts through the line chart, you can see it through the bar chart, and you can see it through the candlesticks. And these trees are very powerful. Depends on the kind of trader you are. If you're a newbie trader and you're still struggling to identify patterns, most importantly, it is very good for you to use the line chart, because with the line chart, you can easily see when you have the market doing back and forth of M formation pattern, W formation pattern. Like you can see this W right here. You can see another one. You can see M formation pattern right there, creating triple highs and the rest of that. It makes it much more easier for you to see patterns. And that is one of the examples and one of the key reasons why you should use the line chart. Anytime you cannot really read carefully and clearly on the candlesticks, you can always come back to the line chart to identify your patterns. And that is for the novice. And by the way, the other part of this is the bar chart. What is the difference? One thing I forgot to tell you, on the line chart, this focus only on the closing price of the time frame that you are using. So if you are using 1 minute time frame or 5 minutes or whatever time frame you're using, the closing price, it's what the line chart deals with. So this was the last closing price, this was the last one. Currently the market is here, and anyway it closes will be the last closing price, of course. So that's how you see this. So without wasting time, the next thing is to check out what we have on the bar chart. On the bar chart, we have a little bit advanced information on it, because right here we have the opportunity to see that the market create everything we need, only depending on how we see it. So you need to train yourself on how you can see it as a newbie trader. First thing first, when the market is moving, you try to see that from the left to the right, right? Look at the market right now. The time we come, the market will create formation of this bar chart to this level. We have to scroll to the left hand side for us to see the next bar chart. So that means the formation starts from the left to the right. So when you look at the bar chart, for example, looking at this bar chart right here, you see that you first have a stroke to the left hand side, then you have a little wick to the upside, you have a longer wick to the downside, then you have another stroke to the right side right here. Now everything you've seen here is what that we refer to as OHLC. That simply means opening price, highest price, lowest price, and closing price. I will take that again. Opening price, highest price, lowest price, and closing price. And in some other contexts, they put this as open high and closing low, and that is an attribute of a bearish candle. Opening high and closing low, but the exact representation of that concept of OHLC is to know the opening price, the highest price, the lowest price, and the closing price. The same thing goes for the bullish candle and the bearish candle. Now let's deal with this. When the market creates anything like this from the left, any part on the left you see the stroke, means that is where the market is opening from. Then when you have the long wick or short wick, it means that is the exact market movement. So when you have it above the opening price, it means the market was there at the point in time they moved the price down. If you see a wick below the closing price, it means the market was there at the point in time they pushed the price upward. Definitely, this is what this will tell you on a bar chart. Now you can see a reason why most traders focus more on candlesticks, because candlesticks will now tell you the broad information about what I've just explained. Now, what is it? When you see candlesticks like this is definitely a bearish candle. This is definitely a bearish candle. It opens high and it closes low. Can you see that? So on the other part, when you look at a bar chart like this opens low at a lower price, then you found the stroke, which is the bar chart. It moves to the upside to this price level, and it retraces back here. Then you see the right stroke. Any right stroke you see is the closing price. Any left side stroke you see is the opening price for both of them, both bullish and bearish representation. So the ideal thing is, if you're having the low stroke at a lower price compared to where you have the right stroke, it means this is a bullish candle. Can you see the difference? This is a bullish candle. So basically, this is a bar chart. This is a bullish bar chart. But look at this, for example. The left stroke is higher than the right stroke. This is a bearish bar chart. But in this other case, the left stroke is, let me see, the left stroke is here, which is lower than the right stroke. This is a bullish representation. Now, that may look a little bit confusing, but it's not. You have to just train your eyes to see it more clearly. All right. So then let's go to the candlesticks. Now, this is the ideal thing. This was the candlestick. This was the batch we were looking at the other time. Okay, this is how it works. In the 19th century, the Japanese rice farmers, they found out how to use these candlesticks formation to understand their spending, their expenditure, the income, to even determine the fortune of the market. And this is how this integrated into forex trading years after through the innovation and the technology. But that's not the business. The business here is, on a candlestick formation patterns, we say we have two different colors. They could be traditional black, green, and red. It doesn't matter. But what really matters is what you understand with the formation of those candles. All right. Now, on this charts, on this contest, the black candlesticks represent a bearish candle, while this other color, aqua color, represents a bullish candle. But one thing that signifies candlesticks from the rest of this guy, whether it's a line chart or bar chart, is candlesticks shows you the full momentum in form of a body. So ideally, what we have with candlestick formation pattern is a typical body. This is the candle body, and this right here is the candle wick. This is the candle body, and this is the candle wick. You can call it a tail, you can call it a shadow, you can call it a wick. W-I-C-K. All right. This is the body, this is the wick. Now, this represents where the market has gone to, and the market pushed it down. So in this case, is the bears that push it down, and in this case is the bulls that push it back up right there. So what we can see is candlesticks basically focuses more on seeing the entire momentum of price and to also see the history of where the price has gotten to, and this will help us to make a better decision as trader. I hope this has helped you. Now, as a trader, it's important you understand more about candlesticks formation pattern. There are different candlesticks formation patterns that will help you to understand what to do at certain points in time. The candlestick formation is not what really matters. It's where the formation is happening. So there are candlestick formation that will happen at a particular price level known as area of value, and that is where you can use them optimally to make money in the global financial market. I hope this helped you. In the next series, I hope I'm going to talk more about that candlestick formation pattern, candlestick theory, and how you can use that to your advantage. Till then, do have a wonderful time ahead of you and enjoy the rest of the day. Bye for now.